Welcome to today's Explainer. Today, we are undertaking a really fascinating investigation into MTAR Technologies. If you've been following the industrial and manufacturing markets lately, well, you already know that this company has charted an absolutely incredible trajectory recently. So, we are going to look under the hood. We're going to dig into the numbers, the operations, and the valuation to figure out exactly what is happening behind the scenes of this massive market standout. Okay, let's dive into this. When you think of cutting-edge aerospace engineering and defense capabilities, you might picture the massive household name global conglomerates. But MTAR has been quietly engineering some of the most critical, high-precision components right here. That isn't just an impressive aircraft. It really represents the sheer complexity and the absolutely uncompromising quality required to even operate in this sector. This is a company whose entire DNA is built on precision engineering for incredibly demanding environments. And the market has certainly taken notice. 391%. Yeah, that is the staggering one-year stock price rise that has literally transformed MTR from a solid, dependable industrial player into an absolute phenomenon among investors. I mean, a surge like that makes everyone sit up and pay attention. But as we know, a number like this immediately begs a massive question. And that brings us to the central mystery of our explainer today. How exactly did a heavy industrial manufacturer achieve the kind of tech-level hypergrowth in just one single year that we usually only expect to see coming out of Silicon Valley? To figure this out, we need to peel back the layers and look at what they are actually building, who they are building it for, and what their financial reality looks like right now. Section 1. The MTR Phenomenon. Building the nation's most critical tech. Just try to wrap your head around the massive scope of what MTR does. On one hand, you have aerospace rockets launching into orbit. On the other, the immense cooling towers of civil nuclear power plants. They aren't just making generic widgets here. They are deeply embedded in building the nation's most critical tech. When a rocket goes to space or a nuclear plant generates power, it relies on the incredibly complex, failure-proof manufacturing that this company provides. It's this diverse, high-stakes capability that forms the absolute bedrock of their market appeal. Section 2. A mega order book. Peeling back the 2,581.9 crore rupee backlog. And this brilliantly illustrates exactly where that massive 2,581.9 crore rupee order book is concentrated. It reveals a highly strategic focus. Over half of it, 51.2%, is locked straight into civil nuclear power. Another 26.3% is driven by aerospace and defense, and 14% by clean energy, like fuel cells and hydropower. What you should really take away from this is that MTR's future revenue is highly visible, and it's anchored in sectors that are currently seeing massive global tailwinds. But hey, it's not just about sitting on a backlog, right? It's about momentum. During the financial year ending in March 2026, they received their highest ever order inflows of 2,453.3 crore rupees. The reason this matters so much is that it proves massive ongoing market demand. They aren't just coasting on old contracts. New orders are pouring in at a record-breaking pace, and that is what's fueling that hypergrowth narrative we talked about earlier. Section 3. Expanding the blueprints beyond the basics. To fulfill modern customer requirements and keep this growth engine revving, MTR is pushing into some wildly diverse and highly technical new applications. We're talking data center infrastructure solutions. They are developing load-bearing space Z adapters. They are even building AMCA structural test boxes for fighter jet programs. They are actively evolving their engineering expertise to capture these entirely new, high-value markets. And they are winning seriously impressive clients to back up this expansion. For instance, they recently secured a 35 crore rupee order from SLB to supply components for data center infrastructure. And on the space side, they successfully completed the design and development of the Z adapter for the aerospace giant Thales Alenia Space, with volume production on the horizon. These are massive, globally recognized players trusting MTR with their critical components. Now hold on, let's pause for a second, because it's super easy to get blinded by flashy client logos and those massive financial figures. We have to contrast those high-profile wins with the reality of their cleanroom floors. This intensive, meticulous, hard manufacturing work is what actually drives the hype. These engineers in clean suits assembling complex valves and precision structures, this right here is the real engine of the company. And they are making absolutely sure they have the physical room to keep this engine running. They are in the process of setting up a brand new greenfield facility specifically for the oil and gas sector, serving major clients like Weatherford. With commissioning expected by September 2026, this physical capacity expansion is a clear, tangible plan to secure and handle all that future growth we've been talking about. Section 4. The Financial Scorecard, Tracking the Bottom Line. Now, what's really interesting about this slide is the sheer velocity of the jump. Look at these financials. Revenue skyrocketed from 676 crores rupees to 876.2 crores, but even more impressively, their net profit nearly doubled, surging from 54 crore rupees up to 95 crores in just one single financial year. This is the exact kind of accelerating profitability that just sets the market on fire. Plus, check this out. They reported an incredible 127% free cash flow conversion rate from their operating profits. In the gritty world of heavy manufacturing, a high cash flow conversion rate is an absolutely crucial sign of operational efficiency. Basically, it means the profits you see on their income statement are actually translating into real hard cash in the bank, which is completely vital for funding those factory expansions we just discussed.
And if you thought that was good, the growth just went into overdrive right at the finish line. In the final quarter, Q4, sales were up 67% to 306 crores. Net profit exploded by an astonishing 214% to reach 44 crores for just that quarter alone. Meanwhile, their operating margins expanded to over 20%. This staggering Q4 performance really brought excitement to an absolute peak. It was literally the jet fuel that accelerated their stock momentum.
Section 5. The Valuation Reality Check, Priced for Perfection? All right, so here comes the big yes but moment. Yes, the stellar growth is entirely real. A net profit jump of 214% in the last quarter is undeniably phenomenal. But the price tag for buying into this growth? It's a sky-high price-to-earnings ratio of 264. Financial analysts are waving a flag here, warning that at these very expensive valuations, the stock is essentially priced for perfection. Any tiny hiccup in their ambitious expansion plans, and the market could react pretty harshly. Because, look, context is everything here. The fundamentals really only caught fire in this last year. If we look at the 3-year compound annual growth rate, sales grew at a respectable 15%, sure, but net profits actually slightly contracted at -1%. Contrast that to the massive 1-year spike, where sales are up 30% and net profits are surging 86%. Actually, scratch that. It's not just highly concentrated, the extraordinary performance is almost entirely an FY26 phenomenon. Which leaves us with this pretty fascinating tension to ponder as we wrap up. We have a brilliantly run, absolutely vital engineering firm with an explosive recent track record. But with a massive 1-year stock rally and a towering PE ratio, we really have to ask, have the fundamentals finally caught up to the hype to justify this new valuation? Or is the stock price soaring just a little too close to the sun? It's a brilliant case study on the dynamic between business excellence and market exuberance. Thanks so much for joining me for this explainer.